We have received so many requests in the last year and a half, I would say, when people actually started watching our channel to cover Palantir. And I think we've both been a little resistant to it. I feel like it's just absolutely exploded in the last few years. Everyone talks about Palantir, but what exactly is Palantir and why are we finally starting to cover it?
Yeah, tons of requests. I would say, especially in the last 3 to 6 months. And I strongly believe, Casey, that charts like this are the reason why we get requests for various stock coverage. So, I think we've been reluctant to cover this one because we didn't feel like we had a lot to add. But at the same time, I think maybe we've changed our mind on that a little bit because much of the material that's out there on Palantir is quite hyped up. And so we did a deep dive. This is a fabulous business. It's very, very well run. The analytics software is quite incredible. I think we both came to that conclusion. We both thought that all along. Doing the deep dive only confirmed that. But let's just peel back some of the layers of hype around AI and some of the other buzzy words that fly around Palantir. And for those of you that don't know what this is, but you feel like you should know what it is, this is for you. If you're a PLTR stock pumper or a Palantir bro, we're probably not going to teach you anything that you don't already know. So this isn't for you. You can watch anyways and probably hate on us, but this is for everybody that doesn't know anything about Palantir.
This is for the people of Chipstock Investor.
That's right. And speaking for the people of Chipstock Investor, you probably know this chart. Casey, what is our mantra when it comes to software? What's our rule of thumb?
There is no moat in software.
At least it's very, very hard to build a moat. And that's because oftentimes software falls into the top of the hierarchy of the economy, products and services. Palantir actually kind of bridges somewhere between infrastructure, software, and also, a product and service for end users. Yes, that section of the economy is massive, but there's lots of competitors as well, which we will start our discussion with.
This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high yield cash account, offering an industry leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more.
Let's put a little perspective on where Palantir sits in the software industry. You can see we have software highlighted here under Gartner's annual spending expectations for 2023 and 2024. You can see that software is supposed to surpass $1 trillion in annual spending. It's one of the fastest growing parts of the IT industry. You can see the growth there at 12.6%, second only to data center growth. And Palantir on an annual basis is about $3 billion in annual revenue, just a very small percentage of this $1 trillion spend in software.
And we've covered this in other parts of the software industry before. Oftentimes, when enterprise grade software companies, these are companies that build and then sell products to large businesses, enterprises. Oftentimes, their biggest competitor is the company that they're trying to sell to. Big mega corporations, large government organizations have dedicated IT teams. And for decades, especially before the advent of the cloud, a lot of these companies would develop in-house software that would run on premises, either on their internal network or run on the workstations of their workforce. But a lot of the hype that has been surrounding Palantir as of late is, first when they had the IPO during the pandemic was cloud software. It's a SaaS company. So lots of opportunity for these software companies to wiggle their way, worm their way into these mega corporations. But now, on top of that, layered on top of that, we now have this generative AI, LLM, large language model layer on top of the cloud that is now in high growth mode. That's kind of bundled up, at least for the most part at this stage, in the data center segment that we looked at in the last slide from Gardner, accelerated computing. But at this juncture, we're kind of, at the cusp of this experimental phase for this new type of AI. AI has been around for decades. Now we have like this new breed of AI. Most people, when they throw that word around now, they're talking about generative AI or an LLM. And Palantir has often been presented as some sort of pure play in this.
We get that argument a lot, but really, AI has been around for a long time. As Nick mentioned, what we're actually talking about when we say AI these days, it seems like, is generative AI. And this kind of walks us through exactly what's happening when a business is using artificial intelligence to get to the end goal. In order to train an AI system, you have to have company data. That's where all of that data is amassed, and a system or a large language model is trained on all of that data. Once that is complete, you can build an app or something that will allow you to interact with that data. Inference is when all of that data gets placed into an actual usable piece of information, like coming up with an answer to a question that you've asked the AI.
So let's talk about Palantir's take on AI specifically. What are some of the use cases for the software?
I I actually used generative AI a little bit in this process when learning more about Palantir. I used finchat.io. You can check out the link below, it gets you 15% off a membership. They have a co-pilot feature that allows you to ask it questions such as, what is a summary of the applications used for Palantir? You can see that Palantir has a lot of different applications. The primary one is government and defense. And then we'll talk about that a little bit more as we continue on, but they also have it branched out into more commercial fields, healthcare and life sciences, financial services, manufacturing, energy, retail, transportation and logistics, and technology and telecommunications. This statement at the end of this slide really sums it up nicely. Palantir's products are designed to help organizations across all of these industries leverage the data to improve decision making, enhance operational efficiency, and achieve better outcomes. Actually, using all of an organization's data and making it actionable.
So it's analytic software, put simply, which is one of the largest software, very broad umbrella terms for the software industry, for that massive 1 trillion per year in spend segment of the IT sector overall. It's huge. Now, the first thing listed here after government and defense, healthcare and life sciences. Casey, this is your background, and you pulled up a couple of use cases in your study for Palantir from some hospital providers in the U.S. that said they were using Palantir to help with bed placement in the hospital. What does that mean?
Well, I don't know what it means using analytics software. The only experience I have with that is when the chief of the house calls up at night and says, "Hey, can you come in? We have an extra we have more patients than we have beds for." Really what they mean is staff to take care of those patients. And so these two use cases that I saw, one was in I think the Cleveland Clinic, the other in Tampa General Hospital. They're using this analytics software to be able to predict when they will have a influx of patients, and with that information they can staff appropriately. I can tell you from experience, nothing is worse than being awake all day and having someone call you at 5 o'clock in the evening and says, "Hey, can you come to work in 2 hours for a 12-hour shift overnight?" It's terrible. So being able to prepare for that and prepare your employees for that is significantly healthier for the employees, the team members, but also for the patients.
I think in your search on this, you made the comment that, in your nearly 20-year career in healthcare, not a single one of your employers used actual analytic software. Maybe that's going to change.
I hope so. I think that would be a very good change.
Yeah. Well, kudos to you. You got out of that toxic industry and got into the much healthier investment analytics business. No problems whatsoever in this business, huh?
Nope, everything's perfect here.
Okay. So you mentioned Palantir is been branching out into commercial customers, big businesses, big organizations outside of government. And the big government customers are the US and the UK. And that's the blue side of this pie chart. You can see still just over half of revenue in recent quarters. That's about to change, but this does bring up an important point. For those of you that don't know what Palantir is, yes, it's analytics software, but this company was actually founded in 2003 in the midst of the war in Afghanistan and the war in Iraq. And it started as a government contractor building software for the intelligence community. So you can really think of this as a software provider, but it's really a defense contractor, government defense contractor. That may not phase you. Maybe it does. We have a diverse audience, and you have different criteria that you like to look at for businesses that you will or won't invest in. So important to mention here, this is where Palantir did get its start, even though the revenue is starting to stilt more towards commercial. But let's talk about the commercial part of this business, because that is the part of Palantir that is in high growth mode right now.
In this chart, we have it dating back to 2019. You can see quarter over quarter, Palantir has continued to increase their commercial revenue. Just in this most recent quarter, you can see a nearly 33% increase in revenue from the commercial side. This chart shows that the increasing amount of total customers are actually commercial customers. The gray bar is the total customer count. The blue bar is the commercial customer count. And you can see that it is the vast majority actually now of the total customer count.
And so this really plays into this part of the AI software market where we say we're kind of in that experimental phase. A lot of these commercial customers are signing up for these new software services and trying to figure out how they can make use of their data. And so it seems like that has been key to a lot of Palantir's recent success in picking up all these commercial customers, is many of them trying to figure out what to do with mountains of information that they may have sitting around from decades of operating. This would also indicate that the minority number of customers, government contracts, still make up the majority of revenue. That isn't to say these new commercial customers aren't ramping up their spending aggressively. So Palantir highlights some of these contracts every quarter on their earnings calls. And this is indicative of where some of these commercial customers are headed. They're in experimental phase right now, but many of them are going to expand their spend with Palantir's analytics and AI software. You can see some of these deals that they're cutting with Palantir, almost a few dozen of them, over $5 million, over $10 million in total deal value. So this is the reason for all of the Palantir AI hype, is many of these commercial customers figuring out, hey, this AI stuff actually works. We're having positive outcomes. Let's increase our spending on software that can help us get these jobs done.
Palantir's products can be broken down into 4 different types of software. The first is Gotham. Gotham was the original product. That software was used to identify patterns in large data sets. That is the one that they designed primarily for governmental use, defense use. And then they have the second product, Foundry. That's a centralized operating system for integration of data and analytics. Apollo, that's the continuous software delivery service, which we can explain a little bit further. And then they have AIP, the AI platform. That's the large language model layer running on top of Gotham and Foundry that you can interact with. Nick, tell me a little bit more about this Apollo service.
Yeah, hopefully Gotham and Foundry make sense. We're going to come back to this, but Apollo is interesting because it sounds like a weird thing to offer, continuous software delivery. But you and I have both worked for large corporations in the past, and it's very common. Again, like I said before, oftentimes Palantir, their biggest competitor tends to be the big organization they're marketing to. If you've worked for a large corporation or worked for a large corporation, you very likely have interacted with, perhaps on a daily basis, with some ancient piece of software that looks like MS-DOS. It operates on your PC in the office, maybe, or maybe it operates on an internal network. When companies talk about making the migration to the cloud or towards maybe a large, more centralized internal data center, you have to figure out not just how to build a new app and how to just move data over to that new cloud system or that new data center system. Ideally, you would like to move that software with the data, perhaps decades of it, into the new system and have it continue to operate without a hiccup, without any disruption of service. That's what Apollo does, if you can think of it in terms like this. And that has massive value for a business, especially if you're really concerned with losing that information, losing the usability of it. It obviously also has application for large organizations that have sensitive data. It could be a government, and maybe they need to move a piece of data off of someone's laptop, let's say in the field, because they've now deemed that information to be classified. How do they move it without losing continuous access to that data to a more secure location? Other large organizations have, a similar problem. So Palantir's work for the defense and intelligence industry gives it some unique aspects to this, the software platform that they have, that solves for a lot of the pain points that large organizations have as they make this migration to cloud computing or data center use. So that's Apollo. But what about the AI platform? Because this is the thing that really gets hyped up right now. Apollo's kind of a bit more nerdy. Casey, what is AIP doing? What's so special about that LLM layer now running on top of the analytics software?
Palantir has a lot actually of great videos that show this AIP in action for various applications. I watched a couple of the videos, one for healthcare, which we already talked about, but the second one I thought that was interesting. The example was of a logistics company facing a natural disaster, and they're working through getting supplies to various locations without a disruption because of that natural disaster. And so you can ask this AIP, this chat, what areas will be most affected by this natural disaster? What places will make the most sense to ship from? How will we get all of our supplies to the people that need it with minimal interruption, with more cost efficiency? And it gives you a probability of these multiple outcomes that it provides to you. And this is where the human portion comes into it. You have to understand your business very well. You can't just look at these answers and be like, okay, this one works perfect. You have to understand the business and then be able to interpret that data. But it helps you walk through the thinking process that you might need to make a good decision. There's also other videos in regards to defense and analyzing missions and making mission decisions. Lots of applications for this platform.
Yeah, one I thought was interesting in parsing through these videos was the one on football, American football, turning your players' actions on the field into data and being able to run different scenarios on different outcomes if you changed play. A lot of people were introduced to Palantir watching Formula One. They were slapped on the side of those Ferrari cars for a few years. Maybe that's your introduction to Palantir. But again, it's analytic software. There's endless applications for this. And that LLM layer that they've added, AIP, which was just added in 2023, a newer product, but it seems like it has taken Gotham and Foundry to the next level in terms of what it's capable of doing for its customers. Which brings us to the next hyped up term as of late, ontology, or Palantir often refers to it as the ontology. Okay, so this is not a new word. This is kind of like a metaphysical term if you're thinking of like more classical studies. What is ontology referring to, though, in the world of computer science?
Ontology is representations of data linked to a real world asset and finds relationships between the two of them. What does that mean exactly? Well, that means when we're talking about data, it's ultimately ones and zeros, right? But it's assigning those ones and zeros or that data to a real world thing, object, and then having the ability to make a relationship between those numbers and objects.
In simple terms, maybe I'll use that football example again. Maybe you're a coach on a football team and you have logs of data from your traditional analytics software. A log on a chart isn't very pretty to look at. It may not be very useful, but you plug it into Palantir and this ontology service kind of turns those logs into a visual representation of what actually happened on the field. And then the finding relationships part between all of those logs can present you with different scenarios and outcomes between those logs of data. It shows you maybe, what would have happened if your player pivoted left instead of right. I don't know, something like that helps the user visualize those logs of information and just makes it more useful. So if you're wondering what this buzzword is, ontology, there you go. Hopefully that's helpful. All right. Another important point here. Again, oftentimes with enterprise software companies, the biggest competitor is the organization they're marketing to. However, you may be thinking about some of these use cases for Palantir, some of the capabilities we've been talking about, and you might think, I already use a piece of software that does something similar to that. You'd be right. This is where the hyper competitive nature of the top of the software funnel and the IT sector comes into play.
We won't go into all of the details of this, but in our show notes, we have some research from Gartner and Forrester that helps understand how software is segmented out. All of these companies that you see here on this slide are competitors of Palantir. Big ones like Google, Microsoft, Amazon Web Services, Oracle, and then some smaller companies, Databricks, which is not a public company yet, C3.ai. All of these companies are doing something in data analytics with AI.
Yeah, and maybe the capabilities aren't as advanced. Maybe they don't have a full suite of solutions to the same extent that Palantir does, but nevertheless, there's some level of competition one way or another. And I think the big competitors that we always need to point out, and that we always point out when we stress this point, there is no moat in software. One of the big reasons why that is Palantir doesn't own the actual computing infrastructure. Its software runs in the cloud or in a private data center. And ultimately, these days, that increasingly runs through AWS, Azure, Google Cloud, or Oracle Cloud. And there's nothing really ultimately stopping one of these big giant software and infrastructure, integrated software and hardware companies from saying one day, hey, you know what would be a good idea? Let's come up with a suite of solutions like what Palantir offers. It's always a risk worth keeping in mind. It doesn't mean that's going to happen or that if it did happen, one of these companies would be able to pull it off, but it's a risk nonetheless.
We'll continue through our framework of analyzing Palantir by talking about the shareholders next. Tell me about the shareholder structure, Nick.
Yeah, this is another item that has been, kind of used to pump Palantir as of late. CEO and co-founder Alex Karp talking about really caring about his shareholders above all else. That's fine and well. This company does have a high level of insider ownership. Alexander Karp owns about 2.5% of the business. You can see that in this slide here. The other co-founder, Peter Thiel, owns about 10% of outstanding stock. And there are two shareholder classes. There's A shares and B shares. I don't think we need to discuss this in this video, the difference between the two, but put simply, Thiel and Karp and some of the other co-founders own the B shares, which gives them most of the voting power for Palantir. They control the direction that this business goes. As far as actual economic ownership, Thiel 10%, Karp 2.5%. And so, I don't think this is any reason to be overly optimistic, nor is it a reason to be pessimistic on Palantir's long-term prospects. This insider ownership, when you hear Karp talk about, I really care about my shareholders, of course he does. He's one of the biggest shareholders. Of course he cares about the stock price continuing to go up. He still has a lot of stock that can accrue to his name over the next 8 years or so. So, again, this is no reason to, feel overly optimistic about the company. So I think we can kind of dispense with some of that hype here about, Palantir taking extra special care of retail investors. I don't think that's actually happening, but whatever. We can, again, if you're still here and you know all about Palantir already, we can probably agree to disagree on that point.
We'll move through Palantir's financials. Palantir's balance sheet is very strong. They continue to accrue cash. You can see that they have nearly 4 billion in cash on the balance sheet and no debt. Free cash flow is also good and has been increasing, nearly 700 million in free cash flow in the last 12 months.
Yeah, that's right. And this is good. While free cash flow has been positive since the IPO a few years ago, GAAP net income has not always been positive. But last year, Palantir did turn the corner on that. So they are now actually profitable on all counts. So whether you use GAAP metrics to value a business, or if you use some sort of adjusted metric like free cash flow or whatever, this is a positive. This is also why the balance sheet continues to strengthen, why more cash continues to get added to the balance, to the company's war chest, I guess, very literally speaking, in some ways. They're profitable on all counts. And so this does give a firm foundation from which to try to stick a valuation on this stock. And so if you're trying to get a firm grasp on an actual valuation and fair value on Palantir stock, this is a positive.
And what evaluation it is.
Yeah, it is quite high. This is 1 year forward expected price to earnings and 1 year forward expected price to free cash flow. Let's just call it 80x, both forward PE and forward price to free cash flow. Now, it's an expectation. Palantir may completely obliterate all expectations over the course of the next year. However, do note that oftentimes that effect where valuations are very high because a company has very minimal profitability, but as it like turns that corner on profitability, you get like these really dramatic 300, 500% year over year increases. As we move out of 2024 and into 2025, that effect will go away. So we're not going to get triple digit increases in profitability for forever. So this begs the question then, how high is this valuation really? And is this a reasonable price to pay? Based on our reverse discounted cash flow model, this is very basic, but this kind of just helps us estimate what type of assumptions Wall Street is baking into the stock price, roughly $32, $33 per share as of this recording. What type of growth assumptions is the market pricing in right now? What do we need to assume to get us to a fair value of roughly $34 per share?
So this is based on an earnings per share price of 18 cents. The market could be expecting a 5-year compound annual growth rate of 40% and a terminal growth rate of 8% thereafter, discounting it 10%. And that would bring us to that around $34 per share.
Mm-hmm.
Do you think that's a reasonable expectation, Nick, over the next 5 years?
Casey, it very well could be. This company is still early on in increasing its profit margins. And from a financial point of view, this business is absolutely operated very well. They made a very quick pivot on switching from GAAP losses to GAAP profitability. And so at this particular stage, yes, the valuation is very high. However, it's nowhere near to the very, very sky high valuations immediately following the IPO a few years ago, when there was no GAAP profitability and free cash flow was, let's say, minimal. And yet the stock price was as high or higher than it is today. But that said, this is a premium that is pricing in significant growth let's just call it for the foreseeable future. 40% per year CAGR. It's not an impossible bar to clear, but it is a high bar. And so that can be problematic because what this usually means is not that the stock won't continue to go up from here, but it can introduce a high level of volatility in the stock price, right?
Yes, absolutely. So, in closing, why don't we talk about what that means for an investor? We think that this stock is maybe not fairly priced. We think that Palantir stock is highly valued, and you're definitely expecting a lot out of the company for the current share price and valuation. But if you do want to invest in Palantir, this could be a good dollar cost averaging candidate where you buy small bits of the stock over time, whether it's going up, whether it's going down, and increasing your position that way.
Yeah, because let's be real. At this point, Palantir is already over 70 billion in market cap. It's already valued as a very, very large enterprise software company. Even though, as you said at the outset of this video, of this recording, Casey, revenue is only about quickly approaching $3 billion on an annualized basis. Rich valuation at north of 70 billion valuation. You're not going to make some epic trade and Palantir turns you into a millionaire in, the course of a year. That probably was never a good assumption, even when you were buying the stock at a pretty darn cheap valuation in 2022 and early 2023. The market cap was still quite high and factoring for significant growth over the course of the next decade and beyond. So I think it's just important to maybe put that in perspective. Starting with a 70 billion market cap, it's probably not a good thing to assume this is like going to 10x over the next decade and become a $7 trillion business or something. I think it would be good to temper those expectations and, like you said, Casey, maybe make this a dollar cost average candidate. Or as an alternative, you might look at an ETF, but you might have a hard time finding an ETF with Palantir stock in it, right?
Yeah, Palantir is not part of the S&P 500 and it's not part of the NASDAQ composite. However, there is a small portion of it in Vanguard Information Technology, or VGT.
Yeah, that's right. And you won't find Palantir even in the top 20 of this ETF. We'll link our video below explaining why we like this particular IT sector ETF. You'll actually find on Vanguard's fund page for the IT ETF, you'll find Palantir roughly position number 32. If you go to this page 4 under the holdings section, depending on the day, holding number 30, 31, 32, something like that, roughly 0.4% of the fund. So it's not a large allocation to Palantir, but it is kind of part of that long tail of small and mid cap stocks in VGT. And so if you have this belief, perhaps that, Palantir could become one of the most valuable software or one of the most valuable companies in the planet over the course of the next 10 to 20 years, VGT might be a simple way to get a little bit of exposure without having to worry about the dollar cost average plan or without having to manage the volatility that will be inherent in a high premium stock like this one.
Well, there you have it. We have finally covered Palantir. We hope that you've enjoyed this episode, that you have some positive feedback. If you have some negative feedback, we'll take that too, but be easy on us, Palantir bros.
And if you do have negative feedback, we actually do welcome constructive criticism, but not from people we don't know and that go by the handle Stonk Pumper on YouTube. I don't know what else to say other than that.
If you want to talk to us, make sure you check out our Semiconductor Insider membership. That gets you access to our Discord channel that has our show notes. We have live Q&As over there and lots of exclusives. So make sure you check that out. It's just $5 a month. And also check out our affiliate links. We have a few that are very good and we personally use. Check them out in the description below. And we will see you again very soon with more coverage here at Chipstock Investor.